Great.
Yeah.
How you doing?
Yeah. Are you gonna pitch? I'm joking.
Good, but I mean,
I know.
somebody canceled the last
Yeah.
Yes, so Felix is gonna manage all the slides.
Actually, the sweet ones. Yeah, there's some.
Yeah,
That's fine.
Yeah, that's okay. It's sorry about that. Can they hear?
Oh, if you want. I don't know if I'll just already teed up, but I can send you a new.
Let's see
Or
what
we
we
can just skip
have.
through it. Either way works.
Or you let you.
So technically, no. Or we can just get honestly. I'll say let's keep going. Yeah, we can just keep this. Cool. No. That's funny with investor Zooms now. It's like 30 minutes.
I know.
So I'm so used to the 30 minutes. The 7 is yeah, really, really truncated.
Thank you. You're well, always. Okay, so stage up there. You're gonna have a mic. Also out here. So all in all, pretty self-explanatory. 7 minutes to pitch, 3 minutes Q&A. Judges are gonna be up here, and number 4.
Okay.
And we're gonna announce everybody.
I guess I'll just use that. They're pausing it.
Let me make sure that everything.
Hi, thanks.
How's the pizza?
It's pretty good.
Yeah? Worth it? All right, let's try it.
I need to like check it.
We're gonna sit here. You have your assignment, right? Question, one question. Yes. Yep. Okay. Very happy to agree. Maybe like I don't see it inside of it.
Yeah,
It's just like
yeah.
very active. Yeah.
Oh, there.
I thought here it is. Okay.
Yes.
Jess.
Maybe you want to see us.
Nice to meet you.
Maybe you want to mix
So
right
this is
now.
the-
I was saying maybe the red was.
I got heavy cheese.
I guess nothing else.
I follow this guy. He's been sober for like he's been sober for like oh no, he broke it. He broke it after like 75 because he felt the need to do it at the yeah, he got it. But he was like 75 because it was initially just supposed to be a real company. Oh no. He's from here.
You got a long
It's just like yeah, it's just first contact.
Honestly, he also like the graphene I always his like stuff is like on point. Recently he came out with like what marijuana was to yeah, he's on the marijuana one is really good. But like I think Rafi's watching the thing. But yeah, I watched the alcohol. That was really amazing.
Yeah.
And apparently like moderate drinking is considered like
A week. Oh, that's not
so like you actually considered a heavy drinker if you have like but like in the weekends I'm doing like so weekends it's kind of like
yeah. Wait, so 8 in a day is like I don't
yeah,
think
that's
I
pretty
can
good. Well, it depends on like yeah, I've had 8 because like a bottle of wine is like 5.
Oh. It's a glass of coffee. It's
We're not like that. So just is there others? It's the green thing though.
yeah. It's weird. What did you actually
We were in the
oh, yeah. No, I mean I mean ice although I feel like it helps if like yeah. Because I feel like I really can't do it. I mean, it's just everyone would need to be on that stage.
yeah, that Halloween thing. I didn't even talk about it.
Where is she from?
She lives in Pakistan. She's just there. I'm gonna do shopping. She's gonna come. I thought you were gonna like do a whole shopping in a month. So I dressed up. She was literally like she walked from her house. Like, she didn't think that. And then after, she was like, "I have to go." Like, we were just together. I was like, she but then she was right into her Halloween party.
Yeah.
And she was like, "You should go see her." So yeah, that's like, but she's kind of like that. She did like then she's trying to transition to her so like have you the schools that are like have that and then the NASA just promotion like for example I think yeah, so that's like a lot like
Oh yeah.
So just give him a key whenever you want to change the slide. And then one day, she literally lives with me.
What?
What? What is this? She's going to medical school.
Oh wow.
That's so big, but it's also small.
Yeah.
She's very neighbor.
Yeah.
She lives on Florida.
Have you hung out with those? Yeah. Yeah.
Were there a lot of us?
That's crazy. She's doing it.
No, they were so good. Yeah, she's good at it. She has good
Oh. Sure will happen. It's also very
No, he was living in New York. Maybe my whole income
Yeah.
potential if I stayed back.
Yeah.
Like for the rest of my life.
Yeah. That's it.
Hey man, how's it going?
Good, how are you?
Good. Good. Meet my friend Tina.
Nice to meet you.
So my first one.
Ooh. Bye's right there.
I didn't see you. I was just like, that's where I looked today. Good coffee.
Second round.
That's so funny.
Pizza?
Okay.
Want to grab a bite?
Fine. I have a dinner later. That's why
I was still about it. What I was doing, that's happening. Show up. That's okay.
You're fine.
But anyways, think around.
it makes the people involved.
No, I don't think so. Most of the conflicts are folks are I don't understand what's going on here. The managing director is no. All of the alumni.
There's a lot of shower about
It took me like 3 minutes.
So that would
Honestly, it's really just like an easy
Yeah.
7 minutes for a while. It's not that far. Yeah.
How much would you pay for it?
Sorry, I didn't see if I same. I think I can see her every day. Okay. That's why I really have to I just put it towards the car later. But like for now, it's okay. Yeah. That's how much my friend pays for renting. That's because she lives somewhere. But like,
Oh, it's 1,600 for a studio. It's not bad. 600 for a studio. It's all good. In Cape Town. First.
it's not that far either. It's like,
I've never been. I know.
and there's honestly there's so much of it.
Yeah.
It's so much fun.
I know there's a lot. And I just feel like it's just so much more life here. On a weekday,
Well, it just always gets so congested right at the entrance.
Yeah.
You look for them. John, or your HPS?
I'm neither. I'm Harvard. I actually helped start this chapter at HAE.
Well, that's where I did that. Yeah. That very first dinner up in
Oh my goodness, you were at that? With like me and Felix and 3 or 4 other
Yeah,
people?
I think Michael was there.
What's your name? Alexa. And I'm terribly sorry. I looked familiar, but I couldn't place where. And so, what do you do?
So I feel like
Oh, that's great.
And John just got
Wow.
he's like the guy there.
I'm still running the same company that I was running when we met 4 or 5 years ago. It's software for managing video content, which is what brings me to LA with ongoing frequency. Yeah. We'll do about $1 million in revenues this year, and we're actually cash flow positive this month, which is really exciting. So we're hoping to, be profitable for the whole quarter. We raised some angel and accelerator money, and then we raised $500,000. Which turned out, I don't say it's all we needed, but we're still looking to raise the next amount. But it kind of allowed us to dodge the whole VC question, because we have not been VC investing today. We just haven't shown the kind of hockey stick growth that those guys like. So like we grew about 25% last year. So they have 250%. And some businesses can do that, and others can't. Ours at the moment, so yeah. We did 3. So we did Quake, Stadia, which does sports-related technology. And launch, Jason Calcanis. So all 3, each of them put in, 100. Launch put in 100. And, go ahead.
No, actually,
just, I'm an entrepreneur. Start up.
I was like, I'm not.
There you go.
Then I'm
I'm
But
just.
it is,
I'm wrong, I'm wrong.
no, it is like a self-fulfilling prophecy these days.
Yeah.
You know, it's like 28, got an earring,
That's what I'm saying.
hoodie. You know, there's like certain things that you expect.
You look around.
But actually, Felix is. I don't even feel like, but he's got the video, right? So he's going to do it for like, he said that co-chair so he's a judge of the yeah, but it's just gonna you said the video. Oh, you'll see the
How does the format of the
I actually don't know. I expect that there's either pictures and then we're gonna vote or blog or something.
you really had a good talk to the scavenger hunt.
I did. Just like that's why I said, oh, it gets all sorts of
Sounds like we should do another
I thought that was
one.
I thought it was so cool.
That's what we're trying to do. Or use the code it.
That's why it has a bunch of have a secretary.
Yeah, I mean, the thing is, we had shopping for like register you without, but it's also there's a sign of times, right? Traffic.
I was just saying, people like it's up there, the sun's down, like LA people are so different.
Yeah.
Yeah, we sign up for it's 20 minutes away. Yeah, we're very different, like it's an hour, I'll be there. Yeah, it's like, I love this. There you go. There you go.
it's great to see it come into fruition. And back then, the vision was really to bring in the tech VC investor and friends community together. So this is a start of something great. Before that, I want to say thank you to our sponsors. I want to thank Techstars and Gunderson. So I know Nick is here. Nick, did you want to speak on behalf of Gunderson?
Thank you.
Yeah.
Hey everyone, my name is Nick Feldman. I'm an attorney at Gunderson Dapper. My colleague Chaz Johnson is over here as well. We're super excited to be here and to be able to sponsor this event and meet everyone. If you aren't familiar with Gunderson, we are a law firm that is focused on startups and the venture capital ecosystem. We do more, we represent more startups and do more venture financing transactions than any law firm in the world. Really looking forward to get to meet everyone, to hear some pitches. Good luck to everyone pitching, and thanks for having us.
Thanks, Nick. I also want to say thank you to Alexa. So Alexa is the chair of Harvard Business School Angels of SoCal. So thank you, Alexa. She's been a supporter since day one. So thank you. Thanks. And last but not least, want to thank HAE Global. So thank you, Regina. We're live streaming as well, and hopefully she gets to watch the recording of this. It's pretty late in Boston right now. So thank you. And thanks for those in Boston that visited us. Okay, and Melena's going to give the housekeeping. So we're really excited. We have 6 startups pitching tonight. So Melena.
Thanks, Felix. Hi, everybody. As Felix mentioned, we have 6 amazing startups, and you will hear all about them shortly. Just a couple of things. Each startup will have 7 minutes of pitching, followed by 3 minutes of Q&A from the judges. There is a People's Choice Award. We will pull up the QR code towards the end, and you can vote for your favorite startup. And we will announce the winners at the end. If you can just please hold off on any applauses and shout outs towards the end, that would be most helpful. And we are ready to kick things off. So let's go ahead and invite Eric from Swerve Fitness.
Thank you. Hello, everybody. So used to pitching behind a screen now. This is refreshing. Awesome. So here we are, Swerve. Swerve is a global sport powered by software as a service. So to just lay the stage for you here in the fitness industry, what happened during the pandemic is that because governments mandated that gyms shut down, it spurred a massive labor shortage. So now that gyms are reopening, what we're seeing is that they're sitting on these group exercise studios that are being massively underutilized. They don't have instructors. They're maybe doing 1 class per day, maybe 2 within these locations. So there's a big problem. 2, they're experiencing, just like every other business, rises in pressures of inflation, and companies are looking for ways to save on costs and for new and creative ways to drive revenue. So Swerve is sitting at a really exciting intersection of 2 macro tailwinds. Number 1 is that now that the world has reopened, people are going back to gyms. We've hit an all-time high of 66 million Americans now have gym memberships. The other part to it is that because consumers were stuck at home for a year plus, taking workout classes behind a screen, what happened is that just completely normalized a virtually led workout. Consumers everywhere could experience the likes of the top instructor from, call it Peloton or any of these other top brands, and also gamification and technology that they really enjoy. So here we are, Swerve. What you're seeing, this is, and we'll get to this a little bit later, but you're seeing, our first partnership was with Crunch Fitness, one of the largest gym chains in the US. They have cycling studios in their locations. We put up a massive video wall at the front of the room, similar to what you see here, where we are now live streaming our classes into their cycling studio. Now, we built out a tech stack that we believe is truly redefining the category of group exercise. And why we believe that, and we'll get to the data a little bit later, but what our technology can do is it can pull the data off of any bikes that already exist at these clubs. We pull that data and then we gamify it as such that each studio becomes a team competing against all other locations on the platform. So what you're seeing here is what you would see if you walked into one of our partner gyms. Up there on the top right, you're seeing your location score against all the other locations. So going back to why this is so powerful, we're experiencing a loneliness epidemic at the moment, and people are seeking community, which is why they're going back to gyms. So with this studio versus studio competition, you're not just going into any class, you're going into an experience with everybody else in it together. But with that, you're now guaranteed to get an elite instructor with every single class that you go to because of our business model of streaming from one to many. And the connected technology of our trainers can see in real time how you're performing, calling you out, how your studios are doing, which really helps the rider feel, or the member feel seen, which is something that is very important when you remove that real trainer. The way that the model works is we're charging gyms a monthly licensing fee of $2,000. The way that we structured this, if you can kind of see here, but that cost is actually a massive cost savings for the gym. Typically, they're paying between, call it $2,500 to $10,000 to power their cycling studio. So when we come in and say, hey, we can charge you $2,000, they are very excited about that. It also provides an opportunity, and not necessarily going in and saying, hey, fire all your people, replace your talent, but you can now invest in your top instructors, you can keep them, but then Swerve can come in and fill up the rest of the schedule. So far, and we'll get to traction in a little bit, but why we're so excited is that we are proving that with this tech stack and the way in which we're delivering on this group exercise experience, it's better, it's cheaper, and it's way more scalable. We are delivering classes at around 1/12 of the cost. We're driving 9 times more revenue to their cycling studio. We're delivering 7 times more classes throughout the day. And we are also proving to drive 6 times more bookings than they were. The proposition for consumers is that this is very disruptive to boutique fitness industry as a whole, because now, because the gyms are not paying more for the Swerve experience, they don't have to pass on the cost to the consumer. So instead of having to pay $36 a class, now you can pay that much for a gym membership and get unlimited boutique style Swerve classes at your gym, plus all the other amenities that they offer. And why we're so excited is, Peloton has really done an amazing job, for the top 10%, but Swerve is opening this up, a boutique experience to the masses, because we're able to power these experiences at low price gyms. We don't have time for this. It's a nice video. If you want, I can send it to you. Great. So to drive home how we win and our competitive advantages here. So first and foremost, we are a first mover in live streaming into gyms. The way in which we're connecting the digital with the physical is a way to harness the power of in-person, but at scale. Our business model, again, is asset light. It's equipment agnostic. So we can tap into any equipment that a gym already has. It's very high margin and scales with margins of a SaaS company. And we've also secured multiple distribution partners that are helping us with speed to market. Stages up here is an example of one of our distribution partners. They have a global sales team of 40 plus people that are now out there introducing Swerve to these gyms and driving us leads, which has helped us build a very robust pipeline already. And here we are. So as I mentioned, we launched with Crunch. This was back in November of 2021. So they gave us 2 locations in New York City to power. Since then, we've more than doubled. So we then launched on the West Coast. Now we're in upwards of 30% of their corporate-owned clubs. We've been able to take that data and sell into other gym chains, of which with just a few months of selling, we now have over 3,300. So the opportunity with these 5 brands, they have in total over 3,300 clubs, which with our pricing of $2,000 a month can bring us to a total potential ARR already with just a few months of selling of over $80 million a year. Here's just an example of, again, just a few months of selling and already what we're built our pipeline. How much time?
A few seconds.
She's like, oh, okay. So yeah, why don't you keep going? Just to drive home the opportunity here. So with a bottoms-up approach, this is a global opportunity, and just with cycling alone, this is a $10 billion TAM. But what's exciting about the framework in which we're building, it's not just for cycling. We are going into other modalities next year, so which will be able to take over more rooms and double our TAM. Our 5-year plan is to get to 5,000 locations within the next 5 years, which is only about 1.3% of that global TAM, which will get us to 120 million in ARR. And we anticipate only one additional capital raise after this $3 million that we are currently raising, which we got a commitment for $1 million today. So we're trekking. As I mentioned, raising $3 million here. For this round, which is our way to fund growth, and also to fulfill LOIs, but also our bridge to profitability. And the exit plan is, as we're aligning with multiple distribution partners, we believe that they are going to want to buy us, but we also have optionality given it's a very profitable business model. And one thing I didn't mention, top right, Marion Roman, she is one of Peloton's co-founders who is a pioneer in the fitness industry, came on board to help us build this out, hired top talent from live television, best of the best instructors. We have investors and advisors, Strauss Zelnick, who runs Take-Two Interactive, one of the largest video game companies in the world. And we've got a great team. Join us. Thank you.
Thank you so much. All right, so we're gonna pass the mic around for questions from the judges. And I think I'm actually the first one, or Amira. Come on up. Eric, all right, I'll go ahead. Can you talk to us about what other type of exercise you're gonna be tackling after cycling? You mentioned that briefly, but there's more in the pipeline.
So the idea is that because with cycling, we can tap into any bike that already exists, but there are gyms out there that don't have bikes. So the idea is an open room concept that would be more of a HIIT type workout, but still carries through this location versus location competition, because that's what we have recognized that really drives home community in a powerful way. So I can't give you too many details. It hasn't been made public yet, but here's a tip.
Great, thank you. Who's next with questions? Amira, go ahead.
Thanks, Eric. Why are you doing this? And how do I join a Swerve class?
So after graduating from Harvard, went into investment. I worked at an investment bank and started taking my clients to boutique fitness studios as a way to just entertain and build relationships, and found that that was the ultimate way to do it. And I just love building community. And so that's how actually Swerve started off, as an indoor cycling studio in New York City, brick and mortar. And with the pandemic, we pivoted to this new concept. But why I'm doing it is because I love what I do. I love bringing people together and making them healthier and happier. What was the other question? How do you take a class? So with those 5 partners that we mentioned, so Crunch Fitness, we've launched in Burbank. So we're in their Burbank location. That's the closest one here. We're also in San Francisco and New York. Excuse me. We're now in Chicago, Florida, and growing.
Thanks, Eric. Question, did you say that you just raised another $1 million today?
Yes.
Oh, congratulations on
Thank
that.
you.
Okay. So when do you think you'll hit cash flow positive?
So with this 3 million, so to reach profitability, we need to get to, it's about 185 gyms that we need to be streaming into, which we believe we can definitely do by the end of next year. Given what's in our, as you saw already, with the gym chains that we're already in, they have over 3,300 locations. So and the data is all pointing in the right direction. They're opening up more. So we feel that 3 million will be the bridge there. But the idea is that we also want to raise a Series A next year to really add fuel to the fire. But that could be our last round to get us to that 120 million in ARR.
Great, thank you so much, Eric. Give just a brief applause for him. All right, and next we have Alpha Trend. Tina, come on up.
many of you are most likely have been hearing about the space of Web3, and some of you might be even participating in it through buying into cryptocurrencies, NFTs, or other digital tokens. However, many of you are most likely observing the space because it's so complicated and just the experience is so fragmented. So I'm Tina, co-founder and CEO of AlphaTrend, which is the most actionable layer for your Web3 journey. We are a team of serial founders who've worked together for over 4 years and built 2 analytical startups. And we have combined 40 years of experience using analytical models to capture profits across industries. Dip, our CEO, is a 2-time startup founder and has 14 years of experience commercializing innovative technology solutions. As an example, one of his predictive models is used across major airports around the globe, predicting airport threats. I have over 12 years of experience in product and operation, working for Fortune 500 companies, and I left my previous job at GE to join this team and build our first analytical startup. And Hui, our CTO, has over 12 years of experience building financial models. He spent 10 years working for TD Ameritrade, using analytical models to predict stock price movements. So this team observed an opportunity in the market, which is growing pretty rapidly. So we're seeing projections that the alternative assets market, or the Web3 market, is supposed to reach 1 trillion by 2028. And currently, there's about 300 million users participating in the space of Web3 through the use of cryptocurrency wallets. That's about 4% of the population. So you see there's quite a bit of a gap in projections, and we need to simplify the space. So the problem that we've identified by talking to various customers and partners is threefold. There's a lot of information in the market that's fragmented, and it's very difficult to understand what to make out of it. The data, when you get access to it, whether you're reading the news, hearing it from your friends, doesn't seem very actionable. It seems overwhelming, and participation in this market is very risky because there's a lot of bad actors, speculative valuations, and hacks happening within the space. So AlphaTrend built out an analytical platform that is a quickest way to profits. We have over 80 cryptocurrencies and tens of thousands of NFT collections, where we bring all the relevant information to your fingertips. So we have information from the blockchain, on-chain data, and we also combine it with social signals that we collect from various social platforms to help people not just understand how people are transacting within the space, but also how they're talking about it and what's the overall sentiment. We are creating this into a most actionable insights, where we're using scoring models and signal assessment to help you understand and make sense of the signals so you can act out of it. And we're also bringing transparency into the process by managing risk and providing visibility into each wallet. We're serving a couple of industries. So we started last year, and a predominant use case was for the trading or the financial industry. So we are serving hedge funds, traditional financial institutions looking to diversify their portfolio, and as well as retail traders. This year, we launched our NFT platform, and we're seeing increasing interest from entertainment companies, as well as brands who want to use our NFT analytical tool to really get a pulse on the market and get a pulse on their collections. Our financial institutions are using our insights to build portfolios. So we're doing asset scoring models. We're also analyzing various signals in the market. If you're investing in the stock market, you probably use fundamental signals, technical signals, and social signals as a couple of signals to look at. And our data is both real time, and we show historical patterns over the multiple years that we collected. So far, as of measuring it for the last 6 months, our portfolios have been outperforming by 8.7%. On the brand and entertainment side, we are using NFTs to help our customers, or NFT analytics to help our customers understand their consumers through having visibility into their wallets. We're also helping customers use our analytics as a collection tool and a reporting insight tool, and they're using it for benchmarking and competitive intelligence. So when a brand wants to launch a collection, let's say Pete's Coffee wants to launch an NFT because Starbucks did it, they can use our insights and understand how Starbucks has been performing and what they can do about it. This is just a list of some of the partners and investors that have been joining us on this journey. We have initial round of capital that came in earlier this year. And we secured partnerships with a couple of data companies, as well as a company like OpenSea, where you can actually execute on trades or invest in assets that you see on the platform through OpenSea links. And so far, we have been delighting our customers and partners. So these are just some of the testimonials from our trusted partners. Zeneca, I'm not sure how familiar you are with the space of NFTs, but he's one of the most, within the top influencers in the space and one of an active trader. His user insights and was able to double in profits within the few minutes that he took the time to use the model and make the trade. We have Tomas, who's the CEO of Arusha Investment, which does stock, crypto, and NFT trading, and he's been using us actively. There's a video there that we won't have time for it. And John Cunningham, investor and partner from World War Capital, who's been using our portfolio insights to invest in the crypto space and has been seeing 8% steady return. So just to wrap things up a little bit, we are a unique platform in the market because we bring both a combination of on-chain data and social signals, and we make it very actionable. There's not a platform out there that uses the scoring models like we do. So if you've never invested in the space, you can just use a score of 0 to 100 to help you understand where we perceive a particular asset is in terms of risk. We're moving pretty fast. So we launched early last year. For the retail investor, we're currently securing partnerships with financial institutions, and there's 2 entertainment institutions that have been interested in our NFT insights, and we plan to grow through further partnerships and direct sales in the next year and look for exits in 2025. This is the revenue model. I won't go too much into it, but we have a retail model and an enterprise model, depending on your needs. And our financial projections show profitability by year 3. And if you've been following the crypto space, there's quite a bit of boom within the space of crypto analytics. Dune Analytics is one of the leaders, has had an exit just within 2 years. It's been in operation, and a unicorn exit, and these are just some of the other examples. So we're raising 1.2 million right now, which is pretty affordable, we think, because seed valuations that have been between 17 to 35 million in the market. And so if you're interested in supporting the Web3 journey and driving adoption of everybody joining this Web3 space, you can talk to me. Thanks, everyone.
Thank you, Tina. All right, first round of questions. Felix, go ahead.
Really great pitch, Tina. One of the key things that I noticed is that you're looking at a very unique type of indicators, right? One of them is social indicators. The first question is, how effective do you think that is in terms of predictive analytics? And then second is, can you give an example or two, please?
Yeah, great question. So when we started Alpha Trend, we actually started by looking at social signals predominantly because we thought that was the most underutilized signal, and we wanted to run correlations between social signals and price movements within stocks and crypto. And what we realize is that it's not always correlated. However, it's a part of a contribution to a movement in price. So for that reason, we use it as a part of the signal as opposed to the signal to look at when it comes to moving prices. And the way we provide transparency into the way we look at the data is we actually show the portfolios within our website, and you can see a combination of portfolios that, so on a scoring model of 0 to 100, we say anything above 60 has a potential to move up in price, and we use that as a part of our portfolio. So you can actually see that the portfolio is outperforming an individual cryptocurrency because of that model.
Thanks, Tina. To get to scale, how do you think that folks are going to find out about Alpha Trend, namely your target customers? Yeah, so we started this out last year, and we were leveraging our network to get introductions, and it was pretty slow. So this summer is when we really started participating in conferences and various industry events to build out a brand, and we started putting booths at different trading shows. And now people are seeing me in conferences and saying, "Hey, your face looks familiar." So we're building relationships mostly through our network and through participation in conferences.
Thank you, Tina. So building a little bit on that question, what do you look to use these sources of funds? $1.2 million is going to get you 12 months. That's not a lot for a lot of people. So what is it you plan to use that investment for?
Yeah. So we want to expand the development of our product, and right now our engineers are offshore, and we want to bring more engineering talent in. So it's predominantly for product development and continuing to build the brand through these events and marketing efforts.
Thank you, Tina. All right. Next up, we have Lila from Split FYI. Come on up, Lila.
I'm using cards. I'm new to this. Okay. Right. So it was 2008. I was 6 months pregnant and sideswiped by divorce. I didn't know, I was paralyzed. I didn't know where to go, what to do next, and who to turn to. And I soon realized that I had to rely on my divorce lawyer at $600 an hour. So at that moment, I realized that something needed to be done because I didn't know which way to turn. Sorry. So through my healing journey and coaching hundreds of clients through the process as a divorce coach, I co-founded Split FYI to help people navigate and understand which way to turn and not to go alone. Split FYI is a tech-enabled, all-in-one divorce management platform and community that makes splitting less painful and costly. I'm sorry. One of the things I wanted to actually ask is how many of you here have been affected by divorce, either directly or indirectly? Okay. So there is one divorce every 42 seconds in America alone. One divorce every 42 seconds. Just let that sit. The scope of the problem we face today is overwhelming. We have annually 16 million plus people struggling with the divorce process, and it's hard on everybody. The cost of divorces average of $40,000 per couple, and the emotional toll is second to that of death of a spouse. The need for change is urgent. Individuals make fear-driven choices and end up abdicating all their decision-making power to a third party, mostly lawyers. And that costs them time, money, and heartache. And not to mention the impact of businesses with $6 billion per year in lost productivity and health-related costs. We want to tap into and help as many people as possible and tap into the $80 billion market. If we were just to take 0.5% of the serviceable market, we could generate $183 million in revenue. Our solution is simple: to be the all-in-one divorce management tool and support system. The benefit to our client is we prepare and educate our clients so that they are well prepared for their lawyer or the legal system, so that they can save time and money. The average cost of an attorney is $300 an hour, but we know in California it's probably $600. And The time spent with attorney getting educated or financially educated or emotionally supported can cost them hundreds of extra hours of unneeded time. So our solution, and it's definitely not a good idea to have your lawyer on speed dial, is that we replace that educational and emotional support, saving them thousands of dollars in legal fees. So today we have a working MVP with paying customers. So we do have proven market fit. And we have a subscription model for clients, and we've got a marketplace for professionals where we take 20% revenue share. We also have affiliate revenue. Tomorrow, we want to offer more product offerings, premium membership, and EAP programs, and advertisement space for our provider. Okay, so this is what it looks like when a client starts our journey with us. We assess where they are on the journey through an intake form. And then through those data points, our technology will build their personal roadmap. We'll recommend products and next steps, and then create a personal dashboard for their resources, then match them with the professional as per their needs. Divorce is a poorly served market today. So we are the only unified platform that offers clients financial direction, a supportive community, and a personalized roadmap with products, strategy, and access to a wide variety of vetted professionals, coaches, and service providers. And for the other side of our platform, there's a gap in the market for the providers because they rely heavily on social media and word of mouth to reach their clients. They're also overwhelmed with the billing services, and we take care of all of them. Our vision is to be the tech engine that powers people through a disillusion of any kind. For the next 6 months, we will evolve from an MVP to a custom technology and product platform. And beyond that, our future plans include incorporating emotional AI to be the continual breakup buddy who can emotionally, intuitively, and productively help clients before, during, and after their splitting journey. In the next 4 years, we project that average growth of community members to 20% month over month, where our professional growth rate will be an average of 10%. At the end of 2025, we have 146,000 community members and 420 professionals. That's at a rate of 560 bookings a month, with the goal of profitability at the end of 2025. Our go-to-market strategy is to be the domain expert of divorce financials. And we will focus on the offering our financial divorce management tools first, as we have identified that as one of the biggest pain points during divorce. We will also leverage our relationship with our service providers, like therapists and lawyers, who can use our platform for their clients as we can supplement their expertise. We are the right team to make this happen. 80% of our team has gone through a divorce or split of some kind, and we understand the process. Both my co-founder, Heather Steer, and I, COO, have 20 plus years of experience, both professionally and personally through divorce itself. We're both seasoned entrepreneurs, and we bring both different skill sets to the table. Our advisors provide us with a pedigree of knowledge from marketing to product development and scaling a business. Okay, we are self-funded to date, and we are raising our first pre-seed round, at 1 million, and closing our first round at 500,000 by the end of 2022. I also wanted to note that in the time that I've been speaking, there has been 10 divorces. Thank you.
Great, thank you, Lila. All right, first question. Amira, go ahead.
Thanks, Lila. I wanted to know, is divorce going to be your sole exclusive focus? Or a question came up is, from what I understand, a lot of the issues in divorce start with a lack of understanding of rights in premarital land. So I wanted to understand if divorce is a beachhead or it's your end all be all product.
So, yeah, I didn't want to overwhelm the conversation around that, but yes, it is a beachhead because there's so much to that process, right? I mean, we're never, people are always going to get married and they're always going to commingle finances and have babies, hopefully. And educating them also on that pre-divorce stage is something that we're looking at as a product as well, because we see what needs to be discussed. Not only that, there's separation that is kind of falls under a different category because they don't have the same protection under law. So they need to understand what does that look like too. So we're capturing that market as well. I hope that answered your question.
Thanks, Lila. So you talked about this is a subscription business, but you know, I don't know how long the average time a divorce takes. If you could sort of address that, and how long you expect people to be subscribed to your service? Because you know, my thought was, oh, it could be just a month or two, right? If it's a quick divorce.
That's amazing. That's a great divorce if it's a month or two. Well, I mean, so what we're finding right now, we're predicting that in the early years, 12 months to 15 months. In the latter years, up to 18 months to 24 months of the life cycle. And the reason why is, and even beyond that, we are finding that since we've launched our MVP, we have our members already there for over a year, and even after they're divorced, because there are co-parenting, dating, career, there's always that support that's needed and that education needed post that. Also, the community aspect keeps the stickiness. So.
Yeah, this is really great. And I kind of am going to piggyback off of what Amira asked. So this is the beachhead market, right? And this is more of like, food for thought probably. So you mentioned like what happens after, right? And, if they have kids, unfortunately, the kids are involved. So maybe that's another market as more like food for thought.
Yeah.
Okay, but great.
Thank you.
Great pitch.
Thanks a lot.
Great. Thank you so much, Lila. All right. Brief applause here. And next startup, I think we have Ami from Roga. Where are you? There we go.
Thank you very much. All right, my name is Ami. I'm the CEO and co-founder of Roga. And a little bit what we're trying to do at Roga, and I think this stat speaks for itself, but after the pandemic, it doesn't look like we're getting less anxious and less stressed, especially, if we can go to the next slide, especially the younger population. 72% of millennials and Gen Z would leave their job just because of their mental health that hasn't been addressed properly. So, and workers are definitely feeling the pain, the attrition, the turnover. Most of tech companies has been incredibly big. We've all heard about this migration and tech migration of workers, and I think this has been replicating a lot. So the story for me, it's very similar. I used to work at Google, doing hardware for many years. I built really cool hardware for them, and then competing against Apple and Amazon. I don't wish that for anyone. But it definitely took a few years of my life of burnout and anxiety until I got to a point where I was completely burned out, and I had to take a break after many years of doing that. Even though I had a really, really cool job that I loved, I was still miserable, taking medication, and I think a lot of you would relate with we've all hit lows at our workplace. So this is me and Alison. Alison is the co-founder. She's a neuroscience PhD from Toronto, and she has also launched multiple wearables and neurotech devices. And we both came to the conclusion that when we met, we were both dealing with the same issues: completely underserved needs at the workplace, completely burned out and anxious situations, and then at the work and also outside, you don't really get the really good benefits, insurance barely covers anything besides 15 minutes with your psychiatrist and a prescription. So we're tackling that. This is how today, and you're probably familiar with this is what your employee would offer. You have time off. If you're feeling unwell, take some days off. There's some performance bonuses, which is really great, and yoga and fitness and stuff like that, which is a little bit of a band-aid solution for the very, very short term. It doesn't really solve the problem. After this, you have the medical route, which we experienced as well. And in America, unfortunately, the situation is pretty dire when it comes to what your employer would give you and also what you can get outside of the workplace. It's really hard to get a therapist, really hard to get a good one that is in network. I think that's unheard of. You move states, you need to get a new one. So it's completely underserved. I was spending hundreds of dollars, even though I had a really, really good gig at my company. So something needed to be done, and that's why we combine our expertise in neuroscience and consumer products to build something specifically for the younger population that is dealing with a ton of anxiety in the workplace. And we created Roga, which Roga in Hebrew means calm and tranquility. That's where the name comes. And it has two parts to it. And we're selling directly to enterprise and companies that are pretty much want to give this to their employees that is completely underserved, because right now what they can get is maybe Ginger or Lyra or Modern Health will give them one-to-one coaching, but less than 1% of their employees are actually on it because it's so hard to find someone to do that. So we built two things. One is we built a beautiful wearable, which I can show you later today if you like, that is concealable. Can you go once behind before? Yes. So the wearable itself is concealable. It's very easy to use. Put it behind your ears, and effectively uses brain stimulation to decrease anxiety within 15 to 20 minutes a day, which is great because you can use it at home where most of the employees are, and I create a routine after that. The second part of the solution is to treat the cognitive and the behavioral issues and the root cause of the anxiety, and it's how do we train the workforce and give them solutions. So we have up to 100 programs already in the app. This is on-demand content that you can just you can download it and see all the content from different instructors for different types of anxiety at the workplace, stress for a meeting, for issues with a coworker, with your boss, or if it's something at home, if it's relationship anxiety, divorce anxiety, or any other types of stress. We have a lot of the content already in the app. This is our beta users, 73% retention after the first 6 months, which is awesome because that means people are not just putting it on a shelf or not using the content. The 50 people that we had on the beta have continuously tried it, mainly because our product is not a nice to have. It's a pain and it's a must to have, and people are trying to really fix the problem. So that's why the retention is high. We made it elegant and discreet. That's a bit of my expertise of when I built. If you have a Google Home in your house, then you know my product. Inconvenient, elegant, you can see. Again, this is a little bit of what the current solutions at the workplace give you, which is our band-aid solutions. Lack of feedback, there's not really a lot of data, and HR and managers are making decisions with very little information, and the turnout is pretty much more days off and less performance for the workers. We've already seen this in our pilot, but between $3,000 to $10,000 per employee that we can save if untreated. And this is when the problem is small, it's much easier to treat it. When it gets really complicated, then you can get all of these issues, which less absenteeism, reducing medical costs, and lower turnover, as well as increasing productivity, which is the coolest part of this, of what we're offering. The market of mental health, especially at the workplace, is massive. Corporate wellness is incredibly big in the last 5 years. There's about 7 new unicorns. So we're following the steps of those, and with something that is completely underserved and underrepresented. The go-to-market. So we are very early in the stage. We've been developing the technology for the past 2 years, and now we got to a point as of a month ago that we opened it. We got into a few accelerators in Stanford, in Canada, in San Francisco, and we just talked about it in the accelerators. And in the last few weeks, we signed up 31 companies because they pretty much everyone's like, yeah, my employees need this. I need this as a founder. I need this as a decision maker. So we started already with 2 pilots. That's about 50 employees. Very successful in the levels of anxiety and performance. Yeah, we can move on to this. One more. So we're looking to get this at least in the Q4, which we launched to 600K in revenue, and we're very much on that line already. And looking to become profitable next year after 10,000 users. That's roughly 10,000 employees. That's where usually when we gonna get our profitability and our path to 100 million, which is in the next 4 years. There's a lot of IP in what we built. We did it all internally. So it's all our technology, and there's really cool stuff that we can do with the data sets in order to improve stuff for the employees. This is all superstars, but essentially, I think the cool thing is that we all come from corporate America. We all had really cool jobs, and we were all miserable. So we're doing this because it brings a lot of purpose to what we're doing, but also it's completely underserved. People under 40, 45% are dealing with anxiety. So if you meet someone that is a little bit on the younger side, they're dealing with a ton of stuff that you can't even imagine. So we're trying to help them. Yeah, and we're raising 2 million. We have half of it committed, and if you're interested, to talk. Thank you very much.
Great, thank you, Ami. Actually, the first question is coming from me. There's obviously the hardware piece to your business. Can you talk to us about where you're building these products? What does the supply chain look like for the hardware piece?
Yeah, cool. That's a little bit of my expertise. So we completely created the entire supply chain ourselves in order to be able to be competitive with the other just only digital solutions. Most of the components are between Asia, Canada, and the US, but we assemble in the US because we're certified in all the safety regulations. So we assemble in the US, and production less than $50 to make each of those headsets, and so it's very high margins. The hardware.
Great, thank you. All right, next question.
Thanks, Ami. I'm sure you thought about this a lot, but you mentioned addressing root cause issues, and I'm wondering if there's more money to be made in putting the burden on the consumer to learn videos on how to manage their high anxiety corporate environments versus helping corporations fix the crappy things that are causing anxiety for their employees.
Yeah, so I think the question is also directed to why not direct to consumer as well, a little bit in that realm.
Why not more services for enterprises to fix their root issues that are causing anxiety?
Yeah. So the first step is for us to deal with the current employees that are dealing with a lot of burnout and trying to reduce that anxiety so that they can continue to work. But as we establish the network and the connection with the HR teams and the managers, we are giving them really, really good advice and training to the managers and to the companies of things that they can do in order to fix the root cause. We can explain and teach with the reporting that we do, these companies, what is the problem and how they can fix it. There is a vertical for consulting there on how to improve it in the workplace, but we'll start with this.
Really cool concept, and it's great to see you integrate your background in it. I have a question in terms of, I know you're kind of early stage. Kind of walk us through your distribution channel. How are you thinking of approaching that?
Yeah. So it's a little bit early for us, but at this stage, because we've been accepted to multiple different programs, So and these are programs of companies that have between 50 to 100 employees. So we've been just pitching to those, and we've had really good success with that. And then slowly we're starting to open up with a few direct B2B platforms in order to reach the bigger players. We have about 6 big players that we've started talking with. Of course, Google is one that I know very well internally, but also Samsung, Sutter Health, Chevron, and a few banks that we've approached. So definitely, especially the companies that are dealing with a lot of fire right now. We have 2 crypto companies that have signed up. So it's gonna be a lot of learning on how to open channels, but our network of investors are definitely one way to open those doors.
Thank you so much. Brief applause here. All right. Next up, we have Bob from Give Back. Come on up, Bob. Thank you.
Okay, so first of all, thank you, Milena, for having me. Thank you, Gunderson, TechSource, for sponsoring. This is very refreshing to be face to face with so many people. So I'm the co-founder of GiveBack. And as I started building my financial wealth and I started working with other financial wealth, like other wealth builders, I started asking a question that I do believe is a very important one, which was, how can I give more? How can I help other people to give more? And the more I navigated the industry, more I realized that the philanthropic world is a very big black box. And I mean, a really big one. If we think about what has been going on in terms of numbers, in 2020 alone, we had 471 billion being donated. And that's like a massive number. But it has been very poorly distributed. But actually, we have more than 1.5 million nonprofits in US, which is also ridiculously, because we could have 10% of those nonprofits alive only, and it would be already amazing. So, another thing is like 175 billion of those donations have been from ultra high net worth individuals that in the US is more than 100,000 folks. So there's a lot of concentration, as we know. So GiveBack is a tech-enabled platform. The whole idea is it's a fintech in the end of the day. So first industry that the fintech founders have been solving is the wealth realms, public Robinhood of the world. And now it's started turning to get to the philanthropic spin. And the whole idea is to be very similar to all these tools, bring efficiency and bring data. We are data freaks, and we really think that's what's missing for people to give more. So the whole idea is for donors and wealth managers to be able to create and to manage their giving portfolios. And the crazy thing to see is the more we talk to family offices, the more we talk to donors, wealth managers, they all have spreadsheets to manage those donations. And sometimes we're talking about 250 million donations a year that we're still tracking over a spreadsheet. And there's no strategy. There's no data being tracked. The way we see, now we've been talking about value-aligned investments, but for giving, it has always been about your values. And we do love the idea of having a very engaging, beautifully done platform. And that's why we decided to use the Sustainable Development Goals as a guideline. They're beautiful, they're colorful. Some folks know about it. Most of people never truly read through them. So we decided to only use as a guideline because as we realize that some of those goals are very important and urgent, there's a lot of donors that do prefer to back other causes still, and they're all important as well. So we do use as a guideline, but we also created verticals or teams. So we first use the 17 Sustainable Development Goals, and then we break down them. So as an example, good health and well-being is one of the Sustainable Development Goals. Love that one, I donate to that. But most of people would think in a certain way about good health and well-being. That could be longevity, that could be performance, that could be more food to people. for me, psychedelics. So I'm a big believer in plant medicine for mental health. So MAPS is one of the nonprofits I donate the most. But if you don't put like verticals plus the SDGs, it's very hard that we'll be able to use our algorithm to match and create these giving portfolios. Next. So the whole idea is, again, data, having KPIs, tracking. We even created our own due diligence process with a rating system, which has becoming like a trend in the nonprofit world. We managed to onboard 150 nonprofits this year. We created like these scores, like there's like one good platform called Charity Navigator, but they only actually track the financials. So we brought like a venture capitalist approach on DD, like on truly first analyzing the founding team, like who is the truly managing this nonprofit and what are like they tracking and on. So, and then we have like a bunch of other data points that we analyze, and then we manage to create these KPIs. In case you are wondering, like, okay, so massive market, amazing opportunity, not so sexy because it's nonprofit, but why haven't anyone managed to solve this problem? There's actually a bunch of people trying to do something, but no one has actually decided to focus on the donors and the wealth managers and bringing design, efficiency, and data together. There's some pieces, like some platforms that are really focused on donor advised funds, which in our case, we don't even see them as a direct competitors because they're actually potential partners. We're integrating with a few of them, like Charity Vest, Be Charitable, that. Like, there's a bunch of them we're in conversations already to integrate because they don't charge any fees to create the DAF. Like, they work their fees on the investment side of the donor advised fund, and ours is really on donation. So one of our resistances is that the donor advised funds are great for tax efficiencies, but then the money is just sitting on a DAF for years instead of being truly distributed for the charities. So the whole idea is like, okay, Charity Vest, Be Charitable, like you brought these amazing platforms to reality. Let's just bring forces together and we'll help diversifying, deploying, and managing for you. So they love it. The other two, like Good Nation I mentioned before, and Louis was already acquired, so quick turnover. So here, that basic slide that we always compare competitive landscape, so there's a lot. So myself and my co-founder, we have been in the financial world for quite some time. We're both Brazilians. We both started our entrepreneurial journey separately when we were 13. And fast forward, now I am the founder of a multi-family office. I have around 500 million under management, do have like a few funds in-house. And through the pain of my clients and myself, that's when I got exposures like, okay, it's just something we need to find technology to solve, not only for ourselves, but it's something we can offer them to other peers. So I had this assumption that family members would like to use the service. We are officially launching the platform in November 21st, but we did like the pre-launch with them. We just hit 150K in revenue through 3 million in donation, a little bit more than that, but like that's the average. And yeah, that's just like the first MVP and proved that, and they really love because we know we're in the nonprofit world now, and we're two women, Latinas, blah, blah, all the minority thing that can look very cute and then people not taking seriously, but their excitement on seeing the platform, like, oh my God, I can just like bring it here. And now I have like a really donation goal. Oh my God, I'll try to achieve that next year and on, and truly deploying. It was really heartwarming to see that it wasn't just from our like intentionality of doing good. We quickly got some nice traction. Like we were nominated one of the best California startups, one of the 100, and then one of the US best startups in fintech and charity. So it's happening slowly. We don't have PR. There's nothing there. Thanks. Our revenue model, we charge 5% of the contribution amount. The good thing is it's a write-off. So most of the donors, they're already donating. And then this sounds like a fee structure for them, but that would go together. Some of them would ask like, oh, but then I'm not donating to the nonprofit. But actually we're donating with data points that are way better for you. So in the end, they all kind of like thumbs up, we love it. it has been less than a year, actually 1 year now, that we started with the MVP, developed the platform. We have a very lean team. Our burn is around 30K a month. We don't plan to grow. Most of these donor advised funds that use these structures similar to ours, they keep a team of like 5-6 people. So we plan to have a 10x in revenue next year, at least, because it's quite, there's a lot of flow like on this type of onboarding. And we are raising 500K at a 5 million pre. We can go up to 1 million if we find too much traction, but that's where we are. And that's the team, great advisors, like some YC founders and other like from the wealth management side. And that's it, I think. Oh, there's one more that I can quickly mention, which is the giving season. Like we really have the intention of ending giving as a season. Like we think people should have a diversified portfolio and donate wisely, especially to not affect poorly the nonprofits they donate. Because if you donate 400K in December and then you don't donate to the same nonprofit for the next 2-3 years, that's a big problem. And we want to really help them managing and knowing where it goes, and then have a very good relationship with the nonprofit side as well. But since we still have the giving season, it's a great time to launch the platform. We think we can grow quite easily before the end of the year, and maybe even hitting our next year goal still this year. That's it.
Thank you so much, Bob. First question is coming from me. One of the things that you mentioned is that you are allocating donations to nonprofits that are actually delivering on results. So talk to us a little bit more about screening for noise in the nonprofit world and how you're actually allocating capital to nonprofits that are really doing good out there.
Great question. So we go through like the first thing that they need to be generating a revenue of at least 1 million, because at least we know they've been having that consistency on managing a certain amount of money. And then we track like what was the size of the team, how they truly manage the team, the goals, what KPIs they have for themselves, what's their mission. And we tend to like more nonprofits that really have their impact algorithm on their own structure. You know, a lot of them don't have. And I mentioned maps. Maps don't. That doesn't mean it will not be in the platform and it will not be rated well, but it will be like, it will not be a 9.4, you know, it will be probably like 8.7, and it will be like there's like a disclosure like, oh, we can't measure the impact for this nonprofit because they don't have one, but if you still want to donate, you do match. It's almost like a dating app, you know, so you match that with your portfolio. So that's how we do. It's really like, well, if I really want to go into detail, it's very extensive, and it took a couple of months to put together like our due diligence and then to experiment. But that's like in a nutshell how it goes. You know, it's like data points, and it really comes from the VC world. Like I forgot to mention, but I was a VC, still am. But through that, like I got to create our own due diligence process internally, and we brought a lot of expertise to the nonprofit in that way.
Thank you for that. So how many companies or how many nonprofits do you actually have in your platform? I'm assuming you're continually building, adding to that, and adding more and more due diligence. So is it coming from your, let's hear that process, and if it's a push-pull,
it's both sides. A lot of nonprofits register for the website. So it's like at one bottom that like you click, we start the process, we like fill out a form, we have a call, and another form, and then we go for more like deeper due diligence if they went for the first phase, just like a startup really. And then there's a lot of inbound, and there's a lot of nonprofits that we really want to have, because we can do a previously DD even before chatting with them. There's a lot of data online that we just go, like we see makes sense, we reach out. Like Malala Fund is a great one, big, they're in the platform. Girls Who Code, they're in the platform. So there's a lot of nonprofits that are already like around us, like Kiss the Ground. That there's some that are more famous, you know, Charity Water, like, you know, it's easy to bring them. And then through the DD, they normally prove to be great choices. So that's good. And then the other thing we do, 150 nonprofits that we truly onboarded, but the IRS has all this database of almost 2 million, it's 1.8 actually today. So like there's a bunch, and we just like a very raw data. So not the most efficient thing like to plug with our platform, but we did. So if you haven't gone through the due diligence through us as a nonprofit, you as a donor will still find like a nonprofit that is smaller. It will just not be certified by GiveBack and not recommended by GiveBack, but you can still donate, you know, and then you'll not be able to track in the same way we want you to track. But we are like strong.
Great, thank you so much, Ba. Quick applause. All right, and last startup, thanks for everyone's patience, is John from Atrix Space. Come on up and take us to space.
You want me to turn the mic down? Is this? Turn it down. Okay, I think we're all awake now. If somebody would like to adjust the mic or the volume. Okay. Okay. Here we go. So yeah, I'm John Berkins. I'm the CEO and founder of a company called Atrix. And we're doing something that's a little bit different from some of the other presentations here this evening. What we're planning to do is to lower the cost of access to space, to make it easier to access space. And our vision for accessing space is to make it as simple as possible to get to space. And the idea being that our vehicles would be able to take off from a runway, fly into space, and then land again on a runway and be fully reusable, much like an aircraft can. And we're thinking that by having aircraft-like operations, we can dramatically reduce the cost of access to space. So let's go to the next slide. Yeah, so to give you a sense for the market that we're looking at, with current launch technologies, the market is projected to be on the order of about $1.25 trillion by 2013 or by 2030. That's the projected cumulative revenue of the market. And that there's also nearly 25,000 small satellites that are going to be launched, which is a kind of a mind-boggling number. There's actually about 143 mega constellations that are planned by 2030. So there's a lot of activity going on in space that a lot of people aren't aware of, but there's huge plans for doing more in space. And there's also at least 5 planned commercial space stations that are supposed to be coming online in the next few years. And I just want to show you, if you go to the next slide, these are kind of small images here, but these are images of 3 of the planned space stations. And the first one is being developed by Blue Origin and Boeing. This is a space station called Orbital Reef. Then there's also Starlab, and the last one is Gravitics. There's a few others out there. And one thing that I won't go into the details on these space stations, but one thing that's worth noting is that Hilton Hotels is actually a subcontractor on one of these space stations. And I think that this is some of the very first evidence that space is actually becoming very mainstream, that they're actually, you're going to see a Hilton logo when you get into the Starlab space stations. And I think this is kind of the tip of the iceberg for what's happening in space. The problem with getting to space, though, is that it's very expensive to do that. And for example, you can actually buy a ticket to go to the International Space Station these days, but it costs on the order of about $55 million to do that, which is out of the range of most people. The reason for the high cost of getting to space, if we go to the next slide, is that most launch vehicles these days are vertically launched, and they're also staged. And what that does is it results in a lot of complexity in terms of logistics and also expensive ground infrastructure. And oftentimes, even for the reusable vehicles, they're only partially reusable. So it results in a lot of high recurring costs for operating these vehicles. And I'll go back. One thing that's worth noting here too is how there's been, even with the most sophisticated
sophisticated vehicles that we have today, the Starship vehicle by SpaceX, there's still somewhat of a lack of innovation in how we get to space. And you can see that even basically for the last 60 plus years, all of these vehicles have been vertically launched and staged. It's basically the same approach being taken over and over again. And so what we're planning to do is to make a fully reasonable space plan. And if we go to the next slide. So this is vehicle. So this is an explanation, or in this explanation, I'll be showing how the small satellite version of the system will work, but the crude version would work in the same way. So the vehicle takes off from a runway like a normal aircraft, then it flies through space, through the atmosphere in aircraft mode, flies very high and fast to the very edge of space. It then turns on its rocket motor and accelerates into low Earth orbit. And the small satellite launch vehicle would then deploy its payloads and the small satellites, and then it would deorbit and then land again for a runway landing, and then the vehicle could be refurbished and then flown again soon after that. The crewed version would allow, once the vehicle gets into space, passengers would be able to unbuckle from their seatbelts and float around in zero G, and the vehicle could also then dock to one of the commercial space stations where people could spend a week or two in space as a fun vacation, or they could do research projects. And so you can see with this explanation of how the vehicle works that it's very logistically simple. Basically, it's very similar to conventional aircraft in that there's no complex ground infrastructure or logistics. And so we think that if you apply aircraft-like economics to the operation of a launch vehicle like this, that the price of the ticket to space for a crewed vehicle would be on the order of hundreds of thousands of dollars rather than millions of dollars. So we think that this approach could actually help to grow the space economy. It could actually create a market for space access, and that could really generate some incredible outcomes financially down the road. So the key to making this happen, though, and our secret sauce, if you will, is the propulsion system that's used in aircraft mode. This is an engine that is similar to the afterburning turbojet engines that you might have seen in the movie Top Gun. But this engine can generate about twice that amount of thrust of those engines. So what it's able to do is to accelerate the vehicle from standstill up to Mach 5, or 5 times the speed of sound, at the very edge of the upper reaches of the atmosphere. And go back. The other end there. Okay. So this is an engine that we call the air turbo rocket. And we've spent a lot of time working on the air turbo rocket over the years, myself and my team. And if you go to the next slide, this is actually a picture of our air turbo rocket prototype in operation. We've done several tests of this engine over the last couple of years. And the significance of these tests are that it shows that you can actually build an engine like this. And the test data that we've acquired to date is going to be used to inform more sophisticated versions of the engine. One thing to point out about the air turbo rocket is that conceptually it's a very simple engine, but to actually make this work for use in a spaceplane application requires a really deep understanding of the engine and how to integrate it with the vehicle, and then how to use the vehicle to actually fly to low Earth orbit. And if we go to the next slide, so we have the team, we think, that can actually do that. And I just want to introduce, you really can't see the pictures here, but my colleagues are Dr. Kirk Christensen and Dr. John Bossert, and both John and Kirk have been working on the air turbo rocket since their time at Aerojet in the 1980s. They worked on air turbo rocket programs there. And then more recently, John and I were working at a company in Huntsville, Alabama in the mid-90s to the early 2000s on another air turbo rocket program. And then just in the last few years, John and I were working on the air turbo rocket prototype that I just showed you. And So we think we have the team, at least the core of the team, that can build the enabling technology for this concept. And what we're working on now is to develop a supersonic air turbo rocket powered UAV. And we're currently raising a seed round to support the development of that vehicle. And after developing that vehicle, we'll use the test results and the learnings from that flight program to develop a small satellite launch vehicle. And this vehicle could also be used for other novel launch and space-related applications, like supporting in-space manufacturing. And then further down the road, we plan to develop the full manned or crewed launch vehicle that could be used for space tourism or other applications. So go to the next slide. So yeah, so that's what we're planning to do, is to make this new type of launch vehicle that can really reduce launch costs. And I just want to leave you with kind of a big picture idea, and that is that reducing launch costs and making it easier to access space will certainly generate significant amounts of revenue, but we think it can also provide some intangible benefits, like perspective on humanity's presence in the universe, and also freedom from terrestrial constraints, like resources or limited resources and limited land. And we think that those two intangible benefits are things that humanity could really benefit from these days. So, so that's what ATREX is all about. Thank you.
Thank you, John. All right, first question coming from Alexa.
John, I came out of the space industry. Can you talk about the climate impact that a space plane might have over the conventional launch vehicles?
Yes, so there's a couple of different ways of looking at that. One is certainly for most launch vehicles, or there's a certain class of launch vehicles that use solid rocket boosters. And for our type of system, we offer a real benefit in terms of environmental impact, because solid rocket boosters really emit some very unpleasant chemicals into the atmosphere. So anything that you can do to get away from solid rocket boosters from an environmental point of view is good. So I think there will still be some amount of impact, obviously, from this kind of system. One way that you could really reduce your environmental impact, though, would be to go to an all-hydrogen system. In that case, the pollutants would be mostly just water vapor with some nitrous oxides. So there will be some amount of environmental impact. Of course, what we plan to do is to work within the constraints of the EPA regulations. So we think, though, that I guess the other way of looking at it is that for a given mass to orbit, we're going to require less propellant to get there, because we are using the atmosphere to our benefit to get to space. And by doing that, you'll emit less pollution overall than if you were using an all-rocket solution.
I'm not going to ask any technical question. I'm going to ask the why, right? So why, what motivates you to do this, John?
Well, it's a good question. So when I was back in school, back in Canada many years ago, I had this idea that getting to space is very expensive, and that surely there must be some improvements that we can make to this problem in general. And I ended up becoming really focused on the idea of improved propulsion or different propulsion concepts to get to space. And so that's how I ended up eventually getting connected with the company in Huntsville that was making this air turbo rocket. So that's kind of the why I gravitated towards this solution. But also, I think it is just our destiny as a human species to expand the frontier and continue to move out into new areas, and basically like Star Trek, exploring the new frontier. So So I feel like this kind of an approach is very complementary to how we're currently getting to space, and could really open up some new markets and business opportunities.
All right, last question. Let's keep it brief.
Thanks, John. I have a much less inspiring question. This looks expensive. How much money do you need to raise to launch this first UAV? And how much money do you think you'll need to complete the first one of those?
Yeah. Yes. Okay. You're all Harvard. I'm not a Harvard person, but I think the Harvard people can probably handle the numbers here. So what we're trying to do with the seed round to make the supersonic UAV is we're raising $20.5 million for that, and that will result in a combination of an engine and a flight vehicle that are integrated and ready for flight. And then we plan to have a Series A through several further seed rounds to perform the rest of the work. And I would imagine that probably Series A is going to be on the order of about $100 million, followed by several subsequent multi-$100 million rounds. And I think to get to this, I should mention Felix and I have actually, and a few other folks here have actually worked at Virgin Orbit, Virgin Galactic, so we kind of have a sense for how expensive these things can get. And so I think the overall price for something like this would be probably about $1 billion. So it's not cheap, but it opens up the universe to humanity. So there's going to have to be a price to be paid for being able to get there. So yeah, okay.
All right, thank you so much, John. If we can just pop up the QR code, we're gonna do the People's Choice Award. So if everybody can get their phones out and please vote, and we will do so as well. Volume down.
It's very interesting because sometimes one of my classmates, my senior, they don't have machines to create portfolios. Yeah. 2020 is the kind of advice in the early stages getting some traction.
Oh, yeah, so close. For sure. I like
Fund managers, especially if so that's probably another two. There are some investment fund managers or managing companies that do accept these kinds of solutions because there's a growing number of employees who are asking to add different kinds of asset management, right? And then not everyone that's different. Or companies manage the 401k. And if there's not a lot of options once we connect, I'll share.
Okay. Yeah, and there's not a lot of
But these days are not focused on, yeah, that's it.
there's a lot.
Yeah, that's right.
Well, I think only a little bit. In space because of all the reasons you said.
I was like, oh, yeah, actually.
Yeah. That's really good. Yeah.
All right, everybody.
So we got the announcement of awards and we're starting with the People's Choice Award. So I'm excited to present this to Give Back. Congratulations.
Does anyone want to take a picture really quickly, or we'll do it afterwards?
We'll do it afterwards.
Congratulations. So I'm co-chair of the Harvard Business School Southern California Angels. We actually have an upcoming boot camp for angel investors and entrepreneurs. And if anyone would like to attend, we will send out an email. We'd love to invite you and give comp tickets. So it's only $99, but we're going to give everyone here a comp ticket for that. So that's a thank you for coming tonight.
Yeah,
And the final award is the Best Pitch Award, selected by 8 judges. And I'm not sure where you are, but it goes to Squirt. Congratulations.
Picture together?
Now,
Come on, we gotta document this. Hold on. Come on in.
Yeah, and as part of the being the winner, you actually get to spend time with Matt. He runs Techstars LA, which is great. So congratulations.
Thank you. Thank you, everybody.
Yeah, as well as the People's Choice. Yeah, congratulations.
Come on in. All right. Yes, thank you.
We should have all the.
Yeah, I'll let people pitch.
Can we have all the founders that pitched?
all the rest of the founders come in for a photo?
Should I introduce this?
That was great. Yeah.